Today we're going to be talking about taking profits too soon. Stay tuned, traders. We'll be right back. Good day, traders. Stacey Burke from Stacey Burke Trading. Friday afternoon in Perth, and today talking about taking profits too soon. One of the things that I used to do in the past, and I sometimes still struggle with that, is getting out of a trade before it hits its measured move target. And invariably, there's an art sometimes, and there's a couple of different ways to approach that. One of the things that I've established in my trading is that I tend to write things out before I start on the market. So if I'm going to take a trade or I'm watching a couple of markets, I've narrowed it down to 2 or 3 pairs. This is the Canadian dollar, and it was in a bullish flag pattern, and I had a measured move target set on that, and it broke out this morning out of the first hour of trade as it should, and I was positioned in that. I was able to adjust my stop. So usually I will move my stop 1 hour after 2 hour of movement. So I like to try and move my position to break even once the trade has moved 2 hour. And my 1 hour stop, if the market starts to move and it's moving towards its target, I like to try and follow that same distance from the high of the day. So if my target is moving 2 hour higher, or it's moved beyond a certain range, and I'll measure my stop loss back 2 hour as it's progressing towards the target. As it gets within a certain range of the target, I may stop that. What I found in the past is that sometimes you can tighten that up to 1 hour to keep your risk the same at the end, but often it may just pip you out and then do a final push through that level to where you would have hit your target. So sometimes that's a decision that you have to make. Sometimes I'll base that on how long the trade has been in place. But it's really critical for me. I know that we've talked about getting your losses consistent. So I try to keep my losses the same for a certain trade sample size. So if I'm trading at a certain amount per pip, I'll try and keep at least 10 trades at 1 hour risk, the same amount in terms of dollars. But I like to try and keep my expectancy over 3. So most of my trade targets are around 5 hour minimum, but sometimes I may only get 2 hour, I might get 3.7 hour, I may get 5 hour. And then, of course, every once in a while, you might get 10 hour on a trade. So it's important. One of the biggest lessons that I've had to learn was to make sure my first loss is the most important, because as I've said in other videos, you can bounce back from a 1 hour loss, no problems at all. But if you start taking 3 hour, 4 hour, 5 hour losses, what happens is that eats into your profits, and so you don't really go anywhere. And it's critical that if you're getting 2 or 3 hour profit on your trades, that 1 hour loss is no problem, because your profits are wiping that out. And that is why it's critical to sometimes just let the trades run. Once you've moved maybe to break even and you've got your target in place, again, you may follow that by a certain amount. So instead of me following it by 1 hour, I might follow it by 2 hours. So at least I'm trapping something out of every trade. And inevitably that's designed so that the minimum I'll get is 1 hour out of that trade. So that's something that you may have to finesse on your own. I've tested that out with my, some of my back testing and just trying some different things. Every currency pair sometimes can behave differently under different types of market conditions. And we talk about this in the 7-step daily routine. Download that if you haven't done so. It's an audio file, but create your own daily routines. Start accelerating your learning, back testing, but again, each day, learning something new. So part of that learning is, learning to take profits. How can you get better at extracting the maximum amount available that was out of that run in that trade? And sometimes that's a fine line between, letting it run a bit and leaving money on the table and running the risk and getting stopped out, or just having a clear-cut decision in place that's how you're going to execute your trade. You're going to place your target in, you're going to have your stop loss in. You're going to adjust it accordingly, but you're not going to take that off until it hits the target or stops you out. That's something, a decision that you have to make. So hopefully you got some value out of today's video, traders. Really important to not get out of your winners too early. Obviously, cutting losses and letting your winners run, there has to be a methodology behind that in a practical sense so that you get the full value out of your winning trades. So again, hopefully you got some value out of today's video, traders. Get really good at extracting the most out of your winning trades, cut your losers, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.